projects are fighting for attention on social media. One company keeps walking into government rooms where the actual rules are being written. And what if I told you that same company is seeing its infrastructure absorb over $1 billion in real-world assets in just the first 2 months of this year alone? If you are holding XRP, you need to see what just happened at the US Treasury, because this is not just another meeting. This is the foundation of something much bigger. So here is what is happening. The US Treasury just hosted the US-UK Transatlantic Task Force on the Future of Markets, and Ripple was in the room. Now this is not speculation. This is the Blockchain Association participating in a roundtable discussion about the future of financial markets between the United States and the United Kingdom. These sessions are part of a series where officials collect feedback from industry leaders before delivering formal recommendations to both governments by the summer of 2026. The stakes here are simple. The regulatory frameworks being shaped in these rooms will determine which technologies become the backbone of global finance and which ones get left behind. By the end of this video, you will understand why XRP holders might be quietly positioned ahead of one of the largest institutional shifts we have seen in decades. And if you find value in breaking this down, hitting that like button helps us reach more people who need to see this information. Let us start with the meeting itself. The Blockchain Association, which includes Ripple, sat down at the US Treasury for this transatlantic task force discussion. If you are new to this story, the US and UK launched this initiative back in September 2025 during President Trump's state visit to the UK. The goal is to propose options for coordination on digital assets, while each side's legislation is still evolving. Now here is what stands out. Look at the companies in that room. When it comes to blockchain infrastructure, one name keeps appearing at these government meetings over and over again. Ripple has a seat at the table, whether it is the White House, a UK-US partnership, or regulatory discussions in other major financial centers. You do not see the founders of other major chains at these specific government strategy sessions. You do not see the same consistent presence from other infrastructure providers. So the question becomes, why is it always Ripple? What do government officials see in this particular company that makes them the go-to voice for blockchain policy discussions? And more importantly, what are they building that justifies this level of access? To understand the significance, you need to know what this task force is actually mandated to do. It was formally announced by US Treasury Secretary Scott Bessent and UK Chancellor Rachel Reeves. Their job is to propose short to medium-term coordination on digital assets while legislation is still developing. They are also working on long-term infrastructure for wholesale digital markets. The previous major gathering was hosted by HM Treasury in London in January 2026. That meeting focused on two themes. First, improving links between UK and US capital markets, including cross-border capital raising and reducing friction. Second, collaboration on digital asset regulation with dynamic discussions between regulators and invited firms. These are not casual conversations. These are working sessions where the framework for how digital assets will operate across two of the world's largest financial markets is being constructed. So when you see Ripple consistently represented in these rooms, it signals something about where the infrastructure is heading. But government access alone does not tell the full story. The real momentum is happening on-chain, and the numbers are starting to accelerate in ways that deserve your attention. Ripple's UK Managing Director, Cassie Craddock, attended the Downing Street Roundtable alongside Chancellor Reeves and Secretary Bessent. She made a statement that deserves attention. She said this is a huge opportunity for closer cooperation between the US and UK on digital assets. She called it a partnership with the potential to set a template for international cooperation in the industry. Now think about that language. A template for international cooperation. As a US-headquartered company with major presence in the UK, Ripple positions itself as well-placed to leverage its transatlantic footprint to drive innovation and collaboration. The UK has long been one of the world's leading financial centers, and Craddock stated that she believes it has the opportunity to become a leading digital asset and innovation hub. Increased international collaboration between these two countries, including initiatives like this roundtable, will further serve to unlock the full economic potential of blockchain technology in both markets. This is the strategic positioning piece. Ripple is not just attending these meetings. They are actively shaping the conversation around what transatlantic digital asset infrastructure should look like. But while the policy discussions continue, something massive is happening on the XRP ledger itself. The growth in tokenized assets is accelerating faster than almost anyone is talking about. Here is where the data gets interesting. According to on-chain data, the XRP ledger has added approximately $1.3 billion in tokenized real-world assets in just the first weeks of 2026. To put that in perspective, that already surpasses the full amount recorded throughout all of 2025. The total value of tokenized real-world assets on the XRP ledger now stands near $1.87 billion, excluding stablecoins. This rapid acceleration has pushed XRP further up the global RWA rankings, positioning it just behind BNB Chain and ahead of Solana in total tokenized asset value. There are now 102 RWA projects live on the network. We are seeing multi-million-dollar companies tokenizing on the XRP ledger right now. Control Alt has hundreds of millions in tokenized assets on the ledger, and is the same company tokenizing Dubai's real estate for the Dubai Land Department. Vert Capital has significant tokenized assets covering agriculture, business, real estate, trade credit, and structured finance. Every asset that moves on these platforms settles on XRP rails. That is not speculation. That is infrastructure operating in real time. There is also collaboration with Ondo bringing substantial value onto the ledger. JP Morgan, MasterCard, and Peter Thiel-backed entities are involved in tokenizing U.S. stocks and ETFs directly on-chain. A firm bringing Wall Street on-chain chose this network for settlement. That says something. CRX Digital Assets represents Brazil's institutional real-world asset capital markets with tokenized credit and structured finance settling directly on the XRP ledger. Latin America's financial market is moving on-chain through this infrastructure. Here is a question for you. With tokenized treasuries and real-world assets flowing onto the XRP ledger at this pace, do you think this trend is going to slow down or accelerate from here? Drop your answer in the comments below because this next connection might change how you view the entire landscape. Now let us connect the regulatory access with the on-chain growth. The DTCC, which stands for Depository Trust and Clearing Corporation, received a no-action letter from the SEC in late 2025. This clears the way for tokenization. The DTCC processes $3.7 quadrillion in securities transactions annually and holds custody of $99 trillion in assets. It is the major clearinghouse for the United States financial system. In 2023, the DTCC acquired Circulating, where Dan Doney was the CTO and founder. Circulating stood out as a multi-chain interoperability platform, and the XRP ledger was a native chain that enabled seamless asset tokenization and transfers across diverse networks. Dan Doney is now the CTO of DTCC Digital Assets. Here is the connection many people miss. Ripple invested $30 million into Circulating, which was chain-agnostic but explicitly supported the XRP ledger for real-world asset adoption. With tokenization adoption accelerating in 2026, Circulating, now under DTCC Digital Assets, brings substantial future potential for tokenization on the XRP ledger. The DTCC's tokenization service is planned for rollout in the second half of 2026, focusing initially on highly liquid assets including stocks from the Russell 1000 Index, ETFs tracking major indices, and U.S. Treasury securities. These digital tokens will carry the same QSIP identifiers as their traditional counterparts, allowing them to move freely between conventional and blockchain ecosystems. Ripple also acquired Hidden Road, a prime broker built for cross-asset clearing. When you connect the dots, DTCC gets approval to tokenize stocks and bonds. Ripple owns a prime broker connecting institutions to liquidity, and XRP ETFs are already listed inside DTCC systems. This is vertical integration of settlement infrastructure. The question is not whether institutional assets will move on-chain. The question is which infrastructure will capture that value. And if you have been following the supply dynamics, something unusual is happening with XRP availability. While the infrastructure pieces fall into place, the supply side is telling its own story. Exchange balances have been dropping sharply. From 2021 through late 2024, XRP balances on exchanges rose toward 18 billion, while price stayed mostly range-bound, indicating plenty of supply available to sell. Starting in 2025, exchange reserves rolled over from 17.5 billion down to around 13 billion. During that phase, XRP trended up before entering consolidation, which analysts linked to coins moving into long-term storage. On-chain data from Glassnode and CryptoQuant Analytics show exchange balances dropping over 50% year-over-year in some estimates. Fewer XRP on exchanges means less immediate sell pressure and a tighter tradable supply. This means even moderate buying can move the price more aggressively. Meanwhile, XRP ETFs are quietly stacking significant inflows. Bitwise has accumulated hundreds of millions in exposure. Franklin Templeton has hundreds of millions flowing in. Canary has over 100 million plus. That is hundreds of millions flowing into XRP exposure while the price has looked relatively stable. Smart money is positioning early. And that is not all. Whale wallets holding significant amounts of XRP continue to accumulate. When you combine shrinking exchange supply, institutional ETF inflows, and whale accumulation, you are looking at a supply squeeze in the making. I want to take a moment here. If you are finding this analysis valuable and want to stay updated as these developments unfold, consider subscribing. We break down the connections that actually matter for your positions, not just the headlines. Let us talk about the specific category where XRP is dominating right now. The XRP ledger leads with around 63% of issuance and custody of tokenized short-term US bonds. This surpasses even Solana and Ethereum in this specific product category. When you look at tokenized treasuries specifically, XRP is ahead. Solana is at around 500,000, Ethereum is at around 30 million, while XRP is dominating with tens of millions in this category. And the growth is accelerating. Z-Economy has over 70 million, up significantly in the last 30 days with T-bills and commercial paper on-chain. Open Eden has over 60 million with transfer volumes up 40%. ARX is FCA regulated, based in London, with tokenized assets including BlackRock, State Street, and Fidelity products. All of this is settling on the XRP ledger. We know how important treasury bills are for institutional finance. When you add this all up, it is over 2 billion in real-world assets on the XRP ledger, and projections suggest we could be looking at close to 19 trillion in tokenized assets by 2033. We are not even in the remote ballpark of 0.25% of that value on-chain yet. As this value starts to come on-chain, as the XRP ledger becomes home to even a small percentage of that value, these numbers could grow exponentially. The XRP ledger is currently in 6th position among leading networks for tokenized real-world assets. To overtake BNB Chain, XRP would need an additional few hundred million in tokenized assets. Given the current pace of inflows, that threshold appears increasingly attainable. If you have not subscribed yet and want to follow how this infrastructure story develops, now would be a good time to join the channel. We are tracking these metrics as they evolve. Here is what all of this means when you connect the pieces. You have Ripple consistently in government rooms where regulatory frameworks are being written for the two largest financial markets in the world. You have the XRP ledger absorbing over $1.3 billion in new tokenized assets in just the opening weeks of 2026, already surpassing all of 2025. You have the DTCC, which clears quadrillions in securities, receiving SEC approval to tokenize assets with connections back to Ripple's infrastructure investments. You have exchange supply shrinking by over 50%, while ETF inflows and whale wallets accumulate. And you have XRP dominating the tokenized treasury category with 63% market share among blockchain networks. This is not about price predictions. This is about infrastructure positioning. The financial rails of the future are being built right now, and XRP is embedded in multiple layers of that infrastructure. From government policy discussions to on-chain tokenization to clearing and settlement systems, the network effects are compounding. The question for holders is not whether XRP will play a role in this transformation. The evidence suggests it is already playing that role. The question is how large that role becomes as the remaining 99% of institutional value migrates on-chain over the coming years. If this analysis